Hi everyone, welcome to today's video. So on today's video, I'm going to do two things. Number one thing is that I will help you understand why there is so much volatility in the stock market right now. आप देख रहे होगे that one day the market rises, other day it falls. There is a macro event that has happened, so I'm going to help you understand that equation in very simple language. Second, I'm going to speak about 5 or 6 trending stocks. A lot of my students say that, you know what, you keep on speaking about HDFC Bank, HDFC EMC, all these type of companies, but there are less discussed stocks. Can you pick those up and discuss? So yes, I am starting a series called as Trending Stocks, and this is episode 1. So I am going to speak about 5-6 such stocks on today's video. Through my body language, you will understand that which stocks do I feel bullish about and which stocks do I feel bearish about. So please listen to this entire video very carefully. Very important learning lessons there. Also, a very big shout out to our sponsors for today, which is Vested. It is an excellent stock investing platform in case you're looking to put some money in the US market. I personally put 20% of my equity portfolio in the US, mostly from a diversification perspective. So in case you're looking to diversify your bets, buy some really good blue chip tech companies, definitely go and check out Vested. The link is there in the description and comment box. And also you can see my US stock investing portfolio. I've created a vest. You can go click it and study it. So the first key thing that we are going to speak about is that why is the stock market so volatile right now? So the news that is coming is that the labor market in the US is very strong right now. Now, this is like good news, so why will the stock market fall? So, okay, so here is how the economics equation work here. Let's see, if the labor market is strong, it means that the unemployment rate is low and mostly people are employed. Now, if people are employed, then what is going to happen? That everyone has job, everyone has money to invest, everyone has money to spend. So as a result, what will happen is that the demand for goods and services will increase. But if the supply is not increasing at an appropriate rate, what will happen? It will cause inflation. Inflation means कि चीजों की कीमतें बढ़ जाना और price rise. Now, if that is happening, then what is the government going to do in the US and all across the globe? They are not going to cut the interest rate. Up until this point, the narrative was that the interest rates will be cut, and therefore the market was factoring that equation into the mix. And as a result, people were feeling bullish कि जब interest rate घटेंगे, then the markets are going to rally. So we will just buy stuff as of now, and everything will be great. थोड़े बहुत महीनों में we will be able to become like करोड़पति, अरबपति and whatnot. But unfortunately now, given this new consideration into the mix, many economists believe that the inflation is going to remain high, and as a result, the governments are not going to cut the interest rate. So is this going to happen? Is this not going to happen? So let me take 2 minutes to explain that. So people gave very complicated explanation about this. I will explain it to you in very simple words. Even if you are a class 9, 10 student, you will get this concept, what I am going to teach you. वरना आप economics की books आगे पढ़ोगे तो even if you read like 5 books, you will not be able to understand this in such simple language. So do consider pressing the like button. I know that you haven't done it. It would allow more investors to become fundamentally aware. So what you need to know is the concept of labor cycle. Now what happens is that in the US, the labor data or the employment unemployment data is very clean. It's very organized because वहाँ पे अधिकतर market is organized market. In India, majority of the employment happens in informal or unorganized sector. But in the US, majority of their labor market is organized. So by studying the labor data in the US, we are able to infer certain points about the Indian market also. So anyways, looking at the labor data from the US, there are 5-6 stages that it goes through. So the first stage is a weak job market. So up until like 6-8-10 months ago, you would have seen that a lot of tech companies, Microsoft हो गई, Google हो गई, Apple हो गई, all were firing people, right? Now that was happening. What did that indicate? It indicated a weak job market at that point in time because the unemployment rate was growing, so to say. This, one could argue, had peaked towards the end of 2020, middle of 2021. So that was a stage of weak job market. That was stage 1. Now once the weak job stage market gets completed, the second stage is strengthening of the job market. क्योंकि bottom बन चुका है, right, in terms of the weak job market, so it will go up from that point. So this is where we are now, right, that the job market is getting strengthened. People are confusing कि अच्छा because the job market is strengthening and unemployment rate is low, therefore वो inflation वाली चीज होगी and therefore the interest rate will not be cut and therefore you should not buy stocks as of now. Are they correct? Are they not correct? See, I can't comment. I can give you my perspective. According to me, that theory is not correct. Why? For that, you need to study the other stages also. So basically what happens is that people are assuming that we are in this stage 3, which is the peaking of the job market. Peak means that we started somewhere here. This was the absolute bottom and this is the absolute top, right? So this is the bottom, this is the top. And in terms of the job market strength, we are somewhere here maybe, or maybe here, but we haven't yet peaked. So what ends up happening is that once the job market peaks, the inflation also peaks. And iski theory is very simple to understand. Now, why would this happen? This is very easy to understand, that if everyone has jobs or most of the people have jobs in the economy, then they will demand more goods, good services, khana order karenge, this, that stuff. So as a result, what will happen? Inflation is likely to go up. This equation nahi hoti, but it is likely to happen. Now this step number 4 only plays out if the companies that are producing goods and services, they are not able to match supply with demand. This is a very, very important consideration to understand, that if supply and demand mismatch happens, then only the inflation will go up. Abhi aisa kuch indication aa raha hai that the supply has peaked. No, the companies are still increasing their revenues. They are still exhibiting a faster growth rate. All that stuff is happening. So it's not as if that inflation has peaked, but the market right now is assuming कि inflation abhi aur aayega. Maybe it can happen, maybe it cannot happen. I cannot guarantee that. But my reading on the market is that it's not as if that inflation is a major troubling factor as of today. Now, this is the story so far up until point 4. Now, hota kya hai that if I am wrong and the other theory wins, where this is actually the peak of the employment cycle, then what ends up happening is that the interest rates will continue to rise, or they will be made stagnant as of now. They will not be cut. Why is that the case? Because इसमें ये equation हो रही है कि what, supply is equal to demand as of now. The companies can't produce more because their capacity has been fixed. They can't undertake capacity expansion in a very small amount of time. So that would indicate that we are at a perfect labor market right now, from where the things can only go down. कि अभी इस stage पे आ गए हैं कि unemployment rate is very, very less. Now, after a few months, the firing will happen and all that stuff will happen. Companies can't produce more. So this will bring us to stage number 6, where the supply will fall or supply will not rise in conjunction with the demand. So what will companies start doing? They will create a weak job market by firing more people. So this is how the entire cycle transpires. So please rewind the video, watch it carefully, make notes. But I hope that this simple commentary help you grasp the concept of how the labor market moves and what type of cycle it is exhibiting. So in summary, it is a very small point here that the economists are divided into two camps. One camp is saying that what, labor market hasn't yet peaked. Some are saying that what, labor market has peaked. जो best होना था हो चुका, अब इसके बाद downfall ही है. And therefore the market is factoring the point, and this is the summary, that the interest rates from this point are not going to get cut. This is what the bearish camp thinks, and the bullish camp, people like me, we think that the interest rates are actually going to get cut from this point. So this is where the situation stands from a macroeconomics point of view. Hopefully now you guys make up your own mind which camp do you want to be in. Let me know in the comment and description box. And with that said, let me move on to the specific stocks that I want to speak about today. Also, a very quick point that if you are interested in learning more about macroeconomics and macroeconomic style of investing, half of it is already filled. I had given out a shout out. Even our October batch is completely booked. If you want to study macroeconomics based investing, which simply means that how to look at big factors in terms of investing, apply technical fundamental business analysis, study things from a fundamental viewpoint, then that is something that I'm going to teach in a crash course. अधिकतर courses में problem ये होती है कि you sign up for a course and then you are unable to complete it because कौन देखेगा इतना, right? So this course is jam packed into 4 days. 2 weekends, we will be studying 4 hours every single day. So it's a fairly long, elaborate course. But because it is designed in a crash course format, the completion rate of these type of courses has been very, very high. I ran some live batches last year and they had amazing response. I had discontinued it because I was extremely busy. But I am going to run a couple of live batches every year. So this is one batch that I will be running. In case you are interested, do check out the details in the description and comment box. And if it makes sense for you, you could sign up for that. So with that said, let us move on to the specific stocks that we are going to speak about. So the first stock that we will speak about is PVR Inox. पहले PVR हुआ करता था, then a merger happened sometime this year. Around 6 months back, there was PVR and Inox merger that happened. It is turning out to be a positive merger for both PVR and Inox. And the stock was beaten down very, very badly. Why? Because 2020 में there was no one was going to the theater, of course. And on top of that, OTT or the rise of OTT happened. Many people started believing यार घर पे Netflix लगा है, दोस्त के password ले लेंगे. What's the point of going to a theater and watching all this stuff? Who is going to spend so much money? And as a result, the stock got crushed like anything. there were a lot of problems that the company was facing, but now it looks like that the company is on a turnaround path. So let me explain that story via numbers, and here a quick discussion over on stocks. I'm not going to go into excessive details of everything because I have to cover a lot of stocks. So if you check the quarter wise number, you will see that the 2020-2021 phase was really bad for the company. Hardly anything happened. Now it has started to bounce back. Now you will take a look at the net profit. You will see, yeah, it's a negative company here, right? It is making like losses. Why is it making a loss? Because you need to understand that this is an infrastructure heavy company. They build, operate theater, lease theaters, have a lot of rental income to pay. So it's a fixed cost type of a business. So of course, if it is not meeting a certain threshold, it is going to exhibit loss. I typically do not invest my money in loss making companies, but there are of course certain exceptions. One exception was Zomato, in which I had put money, I got like so much heat, like when I had started investing in Zomato. A lot of people say, pagal ban hai, right? And this, that stuff. It has actually given me like 30% return already on a fairly big portfolio on Zomato. It is still a loss making company. The point is that some exceptions can be made, especially when a company is in a turnaround stage. For example, अगर आप Zomato को pick करोगे, and if you see, you will see that its earning per share or EPS, it used to be extremely negative. कि हजारों के losses पे EPS was. Now it has started to turn towards profitability. Something similar is happening with Paytm. Same, almost same is the equation with something like PVR Inox. So this is point one that you need to understand, that one is the merger point, that both two big giants in this space have come together. They've created a company. They are going to run the show. Second key point is that this company is going through a turnaround. Now, third key point is around the point of OTTs. I will get a lot of counter questions. Some of you would say, कि यार, you know what, Netflix लगा है, Prime लगा है, you know, Hotstar लगा है, this लगा है, that लगा है. Why would people go to theaters? See, even I used to think exactly the same, but the numbers tell a different story, and when numbers tell a different story, we have to update our thesis also. So this is what the domestic yearly box office collection is. इसका मतलब क्या होता है कि theater में जाके how much money are films making on box office. For example, जवान release हुई and all these movies that got released. How much money are these films making at a box office, not on OTT, okay? So for example, if you study the last 13-14 year history, what you will see is that, and this is the total gross revenues in dollar terms, what you will see is that the situation has been turning around. That 2019 tak, of course, there was increased spend, increased box office collection. So 2020 was a very bad year, 2021 was a very bad year. Now the sales are going up, right? So this is one. This is first key point that you must understand. Growth rate पे ज़्यादा मत जाओ because 2020 was a very low base year. So of course, the numbers will look very impressive if you study from a growth rate perspective. This is part one. Part two is the spend on food and beverages in PVR and all the cinema theaters. So from a per head basis, कि 43 rupees people used to go and spend. I don't know, like 43 में कौन सा popcorn मिलता था उस ज़माने में. It looks highly unrealistic. But if you go and buy like popcorn and all that stuff, the per head spent comes out to be like 135, 140 rupees. And this seems like a reasonable assumption here. आप बोलोगे कि यार movie theater का main business is to sell tickets. Yes. And then why are you studying like F&B, food and beverage, how much money they are making? Because this is a major income stream for companies like PVR Inox. Another key example here is the Indigo flights, that the food and beverage that Indigo sells, it's bigger than Domino's, right? That is the amount of sales they do on food and beverage. Because वो लोगों को पकड़ के बैठा देते हैं in an airplane, and the entire focus is कि भाई ये खरीद लो, coffee खरीद लो, chips खरीद लो and all that stuff. People buy like overpriced stuff. So if you can get the crowd, you will be able to sell like food and beverage. People prefer conveniences. They don't mind spending money. And also additional point here is that the profit margins are crazy for Indigo, food and beverage. Similarly, in PVR, food and beverage, the profit margins on this segment of their business is very, very high. Now let me discuss the third key point, which has to do with the valuation of the company. So you will see that the stock somewhere peaked in before the COVID happened, and it hasn't recovered to that same level. So this is point one that you need to understand, that almost 3 years have happened, the stock has not come back to its previous high. Footfalls are rising for theater, blockbuster movies are coming, a lot of good things are happening, and the understanding now is, if you start comparing it to OTT, कि OTT platforms are for convenience, कि आपने Netflix से movie देख ली, फलाना डीम का जगह आपने movie देख ली, all that stuff, but people still go to theaters from an experience point of view. And वो हो रहा है, why is it happening? I don't know. Do I watch too many movies in theater? No, not at all. But the way the business is moving, we can definitely conclude that it's not a weak business. The entire theater industry is going to come back up. There are multiple avenues for growth, be it in form of exploring ad revenue. So that is again going to become a major prominent source. Second is partnering revenue. So partnering revenue means कि कुछ coupon free मिल गया, right? And credit card cashback offer मिल गया and all that. Then in that respect, the bank is going to pay PVR and all these different companies. These are all new avenue streams that these businesses are still exploring. So good opportunity from that perspective. So this, according to me, is a trending stock and it can do fairly well from this point. But having said this, the risk factor on this stock is not consumer preference. Consumer preference is still there to go to theater, but it is regulation. So we don't know what type of taxation might happen. Boycotting is another big issue that is happening. Then there is cancel culture or rise of cancel culture. If you guys don't know what cancel culture is, Google it. It's a very fascinating story. You will see that happening in the US. That trend is coming to India also. So that is the major risk of the business. I don't think that from a consumer dynamics viewpoint, the OTT trend is going to beat the theater trend, all that. They both have their different markets and both the segments are likely to do well as per my understanding. So with that said, let's move to the second stock. And this is the second trending stock and it is called as PI Industries. Now just a very quick context on what PI Industry does. Basically, it's a leading player in the agri-chemical space. So आपने pesticides, insecticides वगैरह देखे होंगे. So on that API goes into it. API is a raw material that is required to build those eventual chemicals that are used in the agricultural industry. So PI industry manufactures those chemicals. Now almost 75% of company's business comes from API, which is the generic chemical space, and 25% business comes from processed chemicals. So this is the split, and almost 77% of their business comes from outside India. Only 23% of business is domestic. Now one quick point about PI industry is, and this you can see from the chart here, that if you check it from the COVID low, 1300 rupees, and it went all the way to roughly 4000. So 3.5, 4x times gains in the last 3 years, one could argue. And अब आपको लगेगा कि यार this is probably a highly overvalued stock. Might be or might not be the case, but what the company has recently done is that it has started to unlock another avenue for growth. They are moving into the pharma space. Now, pharma space is a very different space compared to where the company currently exists, and there are good and bad points regarding the same. So the pro is that the company already has expertise in terms of dealing with complex chemical space. They have done it in the agri space. Now they are going to contextualize it purely from pharma space. So this is pro 2 is that the company is professionally managed, so to say, and they have shown good consistency in terms of managing their cash flows, generating profits, clean management, फालतू की न्यूज़ों में नहीं आते हैं, good audit, everything good from that perspective. This is a major positive point for the company. Point number 3 is that the company is financially strong. For example, आप देखोगे कोई pledge promoter holding नहीं है, debt to equity, hardly any debt on the company, despite it being in an industry which requires a lot of capital. So they haven't taken much debt, or if they had taken debt, they had paid it off. On top of that, you will see that the company has free cash flows. अब इन सब से होता क्या है कि all this creates a good fodder for the company or provides a good base for the company to expand to other industries. Now, why would that be the case? Well, it is very simple, because for them, raising money becomes very easy. Now, if there is some person or some company that has a good positive track record of managing finances well, आपने लोन लेना होगा, then you will be able to procure debt at a very low, reasonable rate. So the cost of capital for the company comes down, and it actually boosts the entire perspective of moving into a new industry, so to say. So this is a very positive point, and these are all positives. Now the negative is that, see, they are still going and experimenting into a new industry to begin with. Of course, this bet can go wrong and a lot of negative things can happen. So this is a bet that you are taking. I am personally taking this bet because I see the growth happening on this company from both the respects. One is that their cost of capital is low, so they will be able to get enough cash flow going to work in this new industry. And to me, this looks like a vertical expansion. This is not like, you know what, they are like completely clueless to this new industry that they are moving on, or just running some random dumb experiment. No, it is not like this. They have sense, they have generated results in the past. So that gives me a little bit of strength. But having said this, there is risk of uncertainty how the company is going to perform in the pharma space. The final point is that you need to understand the part of the pharma space they are going to move into. They are actually going to go into something called as CDMO. This is called as Contract Development and Manufacturing Organization. इस एस्पेक्ट की ग्रोथ रेट इन इंडिया रेंजेस, इफ यू रीच different reports, it's growing between 10 to 13%, which is a very healthy growth rate for that segment of the business. On top of that, the pharma space has taken a lot of beating over the last 1.5 years due to valuation correction. So the company seems to be moving in the right space where the growth is likely to happen, and that hasn't been factored into their business. So overall, I would say that this is positive. Now with that said, let us move on to the third stock. So the third stock that I'm going to speak about is actually truly trending. And अगर आप इसका चार्ट देखोगे, you will see कि यार, you know what, this company used to trade at like what, 350, 400, and then it went all the way to like 4-5 rupees, and now it has started to come back from the dead, right? So that is something what is happening. If you open the last 1 year chart, this will look like mighty impressive. It was at like 8 rupees. Right now it is at 29-30 rupees. So 4 times ho chuka hai, right? 4 times. So is it a good time to invest in something like Suzlon? What should you do? What should you not do? At least know the basics, and then the final call is yours whether you should be investing in this company or not investing in it. So okay, so let me very quickly show you 2-3 data points. The first key data point is the pledged percentage. So the promoters have 80% of their equity pledged. Why is that the case? Because the debt on the company is very high. It's 1.76 times the equity. So for every 1 rupee of equity they have taken 1.76 rupees of debt. Because debt is so high, they had to go and pledge their promoter holding in order to get extra money that they can go and reinvest in their business, so to say. So this is the financial situation of the company. Is it good? Is it bad? So आपको लगेगा यार ये तो बहुत खराब चीज़ है. Yes, it is actually really bad. But you have to understand where is the company coming from. So to help you quickly assess the history, somewhere in 2007-2008, the company took on a lot of debt in order to expand their international business and grow really fast in India. So they ended up making a lot of acquisition, purchases, aggregating raw material, etc. Then what happened was that two things happened. One is 2008 crisis, सारी funding रुक गई, lot of problems after 2008, very bad phase for all the companies, especially something new, something untested. Second thing is the adoption of wind energy, because the company primarily focused on putting windmills, generating electricity. So that found very little traction. Even now, has the situation changed? The short answer seems to be a no to me, and here is the latest article on this topic. That in COP26, India set a net zero carbon emission target by 2070. While solar energy is expected to be keystone for this transition, wind energy will play a critical role as well. But abhi ho kya raha hai, and this is where you can understand by reading this paragraph that Indian wind energy market has faced some headwinds over the last 5 years. Solar adoption has been much higher compared to wind. Even companies like Tata Power, they have expanded a lot of their capacity in solar. A lot of mainstream players are coming into solar. So all those changes are coming in solar, not wind necessarily. You can do the renewables play, but again, the renewables, solar again comes into the equation. So unless there is a very clear indication that okay, solar is the champion here, and this particular company, Suzlon Energy, is like a leading player in that space, it's a wild bet. If you are betting on something like Suzlon Energy, it can very well give you very high returns because you are starting from a very low base. Personally, I'm not putting any money in it, but if I have to put or back some renewable energy based company, I would rather go with something solar where there is a very clear line of adoption that is happening. So okay, with that said, let me speak about the fourth stock, which is Den Network. Now, just to help you understand what Den Network typically does, it has two business arms. One is the cable / OTT / subscription model, and second is the data cable / internet. So these are the two business lines that the company has. Company found a lot of traction once the Jio platforms, or Jio, which is Reliance Group company, it ended up purchasing a significant stake in this company, and you will see that they had, and here is Jio Futuristic, Jio Digital. You can see they have majority stake here and they own majority of the company. They purchased this equity in 2020, and since then, unfortunately, the company continued to fall. So you can see that the company started falling here, and now it has started to give a run up. I actually purchased some stocks on this company a few months back, so I'm sitting on very healthy profits on this company. The reason for purchasing is very simple, and this is something that you can see that a lot of interest has come. This is the trading volume of this particular stock. So if you wait for 3, 4, 5 quarters, very likely that this will translate into stock results. Something very similar happened with Punjab National Bank also. Go and check. You will see a similar type of tall buildings, trading volumes, all that stuff. Because when the stock is fundamentally good also, you need trading volume and stock interest to come for it to move the stock price. Now, why is the stock fundamentally good? So very simple. So if you take a look at the revenues and profits, you will see that the company is sitting at its all-time high profit now, right? On top of this is a small cap company. So the chances of growth are very, very high. It has very less or no debt at all. There is a lot of inter-business that can happen with the Jio Telecom and bunch of other Reliance Group companies with this company. So therefore, since this company might get long-term contracts, there is a good chance that it will be able to sustain that cash flow cycle, positive revenue and positive profit cycle that it is already started to exhibit. So therefore, I am putting it as one of my 50 multi-bagger picks. I have explained this concept that I am picking 50 multi-bagger stocks into my portfolio. इसमें थोड़ा खरीदूंगा, and the idea is to grow this 50 stock portfolio at least 4 times, right? Out of these 50 stocks, 20 will go to dust. No problem there. That always happens when you are trying to pick these type of companies. So please be prepared for that. I am already highly diversifying this portfolio. So tomorrow on the member community post, I am going to discuss some of my other multi-bagger picks, which I was unable to do today because of the paucity of time. But I hope that you enjoyed this conversation. As a next step, I would recommend that you learn how to build your portfolio. So for that, go and check out this video.